We're going to just kind of go through observing the obvious tonight, which is much more, what to say, obvious when you're using candlestick charts. The drifting of the Dow, as we can see, has been very indecisive on a pullback. Notice all the dojis in here and not really going anywhere with any great force, which is, again, the doldrums. At the same time, the NASDAQ was going in this direction. So basically tells us there's really no strong conviction one way or the other. Apparently the biggies are being sold off a little bit, and the high-tech stuff is still being bought. So just not a whole lot of action. We can see that the NASDAQ has supported on the T-line. We can also see that the transportation index supported right on the 200-day moving average yesterday with a bullish harami. Again, knowing what each candlestick signal represents, a bullish harami tells us the selling has stopped. Notice today they took it right back down to the 200 and took it back up again, pretty much indicating the 200 should be acting as a support level. Bullish harami, gap up, just tells you when the selling has stopped. Okay, so before we get into the stocks, this is why we can kind of pinpoint which sectors are acting the strongest. Here's our gold sector. And this is, again, we observe the obvious. The obvious is there's a trend support level. So the next obvious is where's the top of the trend channel? It'll be somewhere up here someplace, which makes the gold stocks relatively attractive. We had a recommendation out on DRD a few days ago because there's your J-hook pattern. And notice what it couldn't do. Couldn't close back below the T-line. GFI, here's wave 1, here's wave 2. There's your bullish flutter kicker signal, breaking this little resistance level. What couldn't it do? It couldn't close back below the T-line. And now the reason I'm showing all the gold stocks is when you can see a whole sector that's still acting very strong. We recommended Goro a few days ago, breaking out through this level, telling us we're in wave 3 of a J-hook pattern. Nugget, same scenario, still in this uptrend. So the reason we want to kind of observe what's happening in the gold and silver mining stocks is even though the market is just kind of drifting sideways, we can identify which sector is acting the strongest just based on a lot of stocks in that sector acting well. Not only acting well, but have very good chart patterns. TCK, another one's nice steady eddy. Every time it pulls back below the T-line, they bring it right back up again. FSM, we're staying long on this one. And how long do we stay long on these? Until we see a sell signal and a close back below the T-line. At the same time, we're also seeing, that crude oil is trying to base down here. If it can break this downtrending channel, which is almost 2, you know that at least a bounce up to the 200. What's that do for the oil stocks? Kind of takes the fear out of them and people start stepping back in again. This is Whiting. And there's probably a few more like that also. Rice. And this is observe the obvious. This is where the obvious becomes much more clear using candlestick signals. Hold back, what happened as soon as we got back here? We had a bullish doji sandwich off the 50, breaking back up through this level, telling us this uptrend in rice, whoops, got up here, well, right back to a major support level, going back up again. What do we expect this to do? This is where the Japanese rice traders just simply say, let the market tell you what the market is doing. This pulled back. Now we're back up into this trend. Just stay with this one as long as it stays above the T line. Let's see. Before we get to, let's do some of the biggies. Apple, ever since the best friend signal, this is why we always call this the message. Notice when it opened up here right at the 200-day moving average, they started selling it off, profit taking immediately. But what was the message? But they gapped it up huge. That told us as soon as the profit taking is over, your uptrend is going to be in progress. That's on Apple. Netflix, there's not too much here to sink your teeth into, and that's going to happen. This is why, oh, pshaw. There's times to be in a stock. There's times to be out of a stock. Right now, Netflix doesn't look like it's got any real great enthusiasm to it until they can get back up through the 50. Please confirm definitions of both your T lines. Of both your T lines. We're on I don't know what both. The T line is this the black line here, the 8 exponential moving average. And the T line is a very simple concept. If the candlestick signals are the graphic depiction of what's going on in human nature, that gives us a great advantage. How do you trade a gap? Oh, Lewis, we've got whole videos on how to trade the gaps. What happens when you see a gap up in the oversold condition? You start looking for profit taking. What happens when you see a gap up in the oversold condition? That's the strength you're looking for. In this case, this one's been kind of choppy. And Amazon. Again, here's the perfect example of your best friend signal. A doji followed by a gap up from the oversold area. Starts your next uptrend. Doji followed by a gap up. Starts your next uptrend. So if we're trading Amazon in the options room, this one we just stay long as it stays above the T line. All right, so observe the obvious is if this is what the nature of our market is, where the Dow is drifting down, slow stochastics, 3 or 5. 3, if there's I don't have them on this chart, but I usually use the 3T line, which is the 3 exponential moving average. But right now, you've got the 200, the 50, and the 20 simple moving averages. And that's because every major money manager around the world uses those moving averages to make their decisions. The advantage we have is we can see exactly what investor sentiment is doing right at those moving averages. We can see what's happening at those levels immediately. So if the Dow is drifting down and the NASDAQ is drifting up, really doesn't tell us a whole lot. It's not moving with any great magnitude each day. That puts us in situations where if we understand which candlestick signals are the best, like coming out of a slow curve gap up, that's why we recommended ADXS the other day. because this was your best friend signal, breaking out, coming out of this little fry pan bottom, breaking through the 200. That told us there was going to be a lot more upside. XNCR. This is exactly what we're looking for coming out of a fry pan bottom, a big move. Either a gap up and a big move or even just a big move. But the gap up through the resistance level told us there was going to be a lot more upside. This one can still be bought because if it opens positive tomorrow, what do we have? We have basically your doji sandwich, which tells us tomorrow's trading should be the same magnitude as that candle right there. Don, the candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. It doesn't matter whether this would be a 1-minute chart, a 10-minute chart, a daily chart, or a monthly chart. It's still, those patterns still work the same on any chart. I used to trade the E-minis very successfully off the 1-minute, 3-minute, 10-minute chart combination and using the same parameters. As you can see, there's not a whole lot on these charts. The main focus is what pattern and what signals are we looking at. And the reason that's the main focus is because of one simple factor. And the Japanese rice traders have developed it for 400 years that human nature works the same way time after time. That's why we're looking at candlestick patterns and signals, because that's what human nature does over and over and over. So here's the NPTN, which we recommended. There's our little kicker signal. There's our J-hook pattern setting up, and this is what we call the classic pattern. Classic pattern is a fry pan bottom, which has a strong price move, and the prerequisite for a J-hook pattern is a strong price move, and then the J-hook pattern continues. So you add those two together, it's kind of a classic pattern. That's what happens coming out of these big fry pan bottoms. SRPT was recommended because it did the bobble kind of breakout. Notice our doji sandwich that broke out through the 200. So if you add up all the information that we know about candlestick signals, we know very simply the rule of the doji. Lewis, yes, we've got all the scans, search formulas on our website, and we've got videos that show how to set up all your scans. Very simple. Knowing what the scans are and having them all set up. If you don't know what you're doing, you can still find the best scans each day in less than 20 minutes. If you know what you're doing, you're going to find the best ones in probably 5 to 7 minutes. But there's our doji sandwich. Very simple rule of the doji. It's going to move in the direction of how they open after a doji. Open it positive, what's that tell us? That the 200 is not going to act as a resistance anymore. How come some of the symbols have an S? Oh, that's just this software to say stock.srpt. If I type in FCL, that's crude oil. That's futures. Lots of echo. Rick, you just got the echo. Either you're in here twice or you need to log off and log right back on, and that would get rid of it. Which is the best platform to implement the scans? You can use the softwares, either Metastock, which all our formulas for finding the best stocks are on that one, TCNet. Let's see. What else? Oh, crude oil. Let's see. That's the AU6. I'm suspecting it's going to at least bounce back up to this level, the 200. Remember, once a support level is breached, they'll come back up and test it, see if it's going to act as resistance. TC2000, yes, that's TCNet or Wooden Brothers, good scanning software. Yes. The scan setups are already in Thinkorswim somewhere. Yeah, they've got all our formulas at Thinkorswim, Ninja Trader, I think TradeStation. So we've given them all our formulas. All right, let me zip right along here. So knowing that the market may not be moving in any great direction, if you can see what's happening, and this is why when we started recommending SQ, as long as it stayed above the T line and this fry pan bottom, this is what we're expecting, those big moves to the upside. Now this one backed off, but this one becomes still a very good buy if it does a doji and then it starts back up telling you the profit taking's over, because where's our next likely target? Up here to fill this gap. If it moves in that direction, what other pattern does it have as far as Western terminology is concerned? You got a big, huge island reversal, which usually shows a lot of strength. Mateus, yes. Yeah, they're all on our website. No, there isn't, William, there isn't too much going on. We got gold, which is, right now gold is moving up. Let me go to it's in this upward trend channel. Silver, same scenario. You've got kind of a J-hook pattern in progress, especially if it opens positive tomorrow. J-hook patterns keeps moving that direction. Soybean, or not soybeans, but corn, still in a downtrend. And there's your bearish J-hook pattern. So you can stay short. I wouldn't be shorting corn here. Same scenario with wheat. Wheat was a short when it broke the T-line. Notice what happens every time it gets back up to the T-line. There's your shooting star, failure. There's your evening star, failure. So right now, all you can do on wheat is stay short until you see a buy signal. And soybeans, nothing here either. It's trying to support on the 200, so wouldn't be buying, wouldn't be shorting it at this level. So there's sometimes when things are getting into an area where you just leave them alone. Now, I've been shorting hogs. V. Yep. You can see what's happening in hogs. Every time it comes up to the T-line, it sells off. So we're short hogs right now. And cattle, ever since the bullish Harami gap up, has been in an uptrend. But now we got a little shooting star. And what usually happens when they go through a resistance level? I'll come back and test it, see if it's going to act as support. Oh, can somebody help Julie with where she can find our scans on Thinkorswim? How does the overbought affect that? Paul, I don't know what that refers to. Lumber. I rarely trade lumber. Is this? I don't even remember what the symbol is anymore for lumber. Lumber is just so thin. Anyways, let me get through some of the stocks, and we can come back to some of these. So this one, because of the fry pan bottom, this is why it's important to know which patterns are working. You can see what this one was doing, even though the market wasn't really moving in any direction. TSEM, set up the same way. Big fry pan bottom, breakout right there at the resistance level. Probably has a 45 degree coming off of here. Oops, I don't think this was a fry pan bottom. This is one I forgot to show. Notice how that little fry pan bottom's kicked out with a kicker signal. And notice the belt hold continued the uptrend. So very simple. Buy signals, sell signals. Buy signal, just puts you in the right position at the right time. Paul, we'll try to find another one. CMCM was one that, this is kind of very simple also. Notice how the T-line was crunching up into the 50-day moving average. That's what we call a T-line crunch. And Nora over in the options room was buying the calls right here for 35 cents. I imagine those are pretty close to $1 at this point. So that was a good trade. SRPT, did we do this one? Yes, the Doji Sandwich breakout. And we did ADXS, another gap up. CHGG was the bobble breakout. Bobble is a very simple pattern. It comes up, hits a resistance level. We see candlestick sell signals. Pull back. Notice how it didn't move very far away from the T-line, then came right back up to the resistance level. When it gapped through, this is where you have an advantage knowing what should happen coming out of a pattern. A lot of people say, well, shoot, I don't want to buy a stock that's already up 5, 10, 15, 20, 30, 40%. You do if it comes out of a pattern that you recognize. So the bobble pattern breakout told us there was still more upside. HFC. You can see what's happening here, big fry pan bottom. Where would you want to be buying this one? Very simply, if it coming back up through today's open, right here, darn, I can't draw a straight line, right here where the pattern started, shows us got a good prospect of a strong breakout. Fit, another one. Coming out of this little fry pan bottom right here at the resistance level, and notice how it did it with your strongest of the candlestick signals, a kicker signal on the breakout. What usually happens, you get very strong price moves after that. Remember, a kicker signal is telling you that they have kicked the investor sentiment in the opposite direction. If you wait on those overextended stocks until they close under the T-line, Lewis, the caveat to that is the further away you move from the T-line, the higher the probability it's going to come back and test it. So if you're a good distance above the T-line and you see a sell signal, anticipate you take your profits because they're probably going to come back down and test the T-line area. There's kind of a little Morningstar type signal. This one you can be buying on positive trading, a doji sandwich breakout of this resistance level. What else we got here? Oh, we did this one. XNCR, again, there's your fry pan bottom breakout. Remember, these are situations, these type of patterns have high probability results. Something has gone wrong here. Otherwise, we wouldn't be looking at them today. The Japanese rice traders point out exactly what happens. There's our bullish engulfing signal. Gap up through this resistance level. There's wave 1. There's wave 2. Wave 3 will probably be the same magnitude as this, which looked like about 4 points. 4 points from here puts you up into the $14 area. So not only do you have situations where you can identify which direction they're going, but you can pretty well calculate what the next move is. Wave 1, wave 2, going into wave 3 if it breaks out through this level. And how big's wave 3? Same as wave 1. 8 points. That takes you up into the $25, $26 area. Now, what does that do for you as far as knowing what your potential target is? It does two things. One, it tells you whether it's worthwhile to get into that trade in the first place. And two, if you're an options trader, you might be buying one call and selling another call at the resistance level or the target area, doing a spread, which gives you a whole bunch of advantages as far as returns and your risk-reward factor. HMNY. There's your wedge. Big breakout today. Now, what happened once it came up here? There was lots of profit taking on this big breakout. So what do the Japanese rice traders tell you? If it opens positive, start buying because that tells you the profit taking is over. And OCLU, this is your best friend. Anytime you see a doji in the oversold condition and they gap it up, you want to be buying. Not only are you going to be in an uptrend, but you're going to be in a very strong uptrend. So again, when we do the quantitative analysis of what's happening, or what's a lot of people say, well, which signals are the best? Well, we've already refined that. The 12 major signals is narrowed down from the 50 or 60 signals that are out there in the candlestick universe. If you understand what each of the 12 major signals represents, and because the Japanese rice traders not only visually identified it for us, but they also explained what the investor sentiment was that created those signals, when you add that combination, you now start having an understanding of what moves prices or markets, same as somebody that's been trading in the market for 50 years. How do you determine your risk reward? Oh, I look at it to say, all right, what's my upside potential? How much juice do I have left in my stochastics? Where's my target? Well, my first target that could possibly fail is right here, but I have the advantage of seeing what it does when it gets there. A lot of people say, what is your target? I'll say, watch to see what it does here. If it goes through, watch to see what it does at your next target. And when I say watch to see what it does, it means we're looking to see if there's a sell signal that occurs at those levels. Oh, it all depends on what the gap is, Louis. If I was buying this one tomorrow, I wouldn't want to see it trade back below the low because that would tell me the sellers have most of the control. If it had opened, so it all depends on, remember, the candle itself, the candle itself is the open and the close, which are the most important elements of what the decisions were. Here's a kicker signal on IL, another one that has profit taking in it after the kicker signal. Well, if it opens positive tomorrow, what's that tell us? Number one, it tells us the profit taking is over, and two, that the 200-day moving average is not going to act like act as a support level. Whereas, a resistance level is probably going higher. GoDaddy, kicker signal. High probability there's going to be more upside. HUES, kicker signal. More than likely there's going to be a lot more upside. Remember, this is your strongest reversal signal as far as candlesticks are concerned because they were heading in this direction and they kicked it in that direction, which means there's usually going to be a lot more upside. I only pay attention to a stock pre-market, usually about 2 minutes before the market opens. That's where everybody making their decisions starts putting their orders in. which also helps to say, all right, if I was going to buy this best friend signal coming out of the slow curve, gap up, what do I want to do to see that this is confirming the buy signal? I want to see if they're buying in the morning. So if I see it's opening up slightly higher, I'm going to be ready to buy immediately. What do you not want to see if this is a strong buy signal? You don't want to see it opening back down here. That tells you that the buyers aren't there. You pass on this one. No, a kicker signal can happen any place. What we're looking for in most signals is we're looking for a buy signal in the oversold condition, or we're looking for a sell signal in the overbought condition. But a kicker signal, you disregard where it is because it's so strong that it's, whether it's in the overbought or oversold condition, it's going to tell you there's been a strong change of investor sentiment. It's going to move in that direction further. The moving average, the moving averages, the 200, the 50, and the 20 are simple moving averages. Again, that's because every major money manager around the world uses those to make their decisions. The 8, the T-line, the 8 exponential moving average. Now, I was mentioning before that the candlestick signals are the graphic depiction of what's going on in human nature, which is the most consistent indicator in the world because human nature does not change. That's why we see patterns that work consistently, because human nature always works the same. Now, you know everybody in the world has the 200, the 50, and the 20 on their charts. That's why they act like magnets, because everybody's waiting to see what happens when it gets to one of those moving averages. Nobody has the T-line on their chart. So if you look at it on the basis that it works so effectively, and I tell people, don't take my word for it. Put it on your chart and see whether you see signals, buy signals, and close above the T-line, whether it excuse me, doesn't continue with the practice of as long as it stays above the T-line, you're in an uptrend. But because it works so effectively and nobody has it on their charts, that pretty much tells you that there's that it's not going to act like a magnet. So the effectiveness is that the T-line works like a Fibonacci number, a natural support and resistance level. So if you have the combination of candlestick signals, which are the graphic depiction of human nature, and the natural human nature support and resistance level, when you put those two together, you've got a very strong combination of knowing that you're in the right place at the right time. What did I just do? PCRX. And then there's PRXL. As you can see, broke out into wave 3, wave 1, wave 2, going into wave 3. This should probably get you up into about the $77, $78 area. So showing some of these, remember, we're in a market condition right now where nothing is moving, or the majority of stocks aren't going anywhere. So if we can identify, here's your perfect, remember, if a doji means indecision, a series of dojis means much greater indecision. And when they do a best friend signal out of that, what's that basically tell you? They finally made up their decision which way they're going to go. I would suspect this one is going to go all the way back up to test the 200-day moving average. Again, the best friend signal is just something that tells you that not only have they come out of an indecisive stage, but they've come out with great enthusiasm. And that's exactly where you want to be, is coming out of a sell buy signal and showing the buying is coming in with great enthusiasm. We also recommended going short on CRE because there's your left-right combo closing below the T-line. Where's the next likely target? Back down here around the 200, which would be kind of confirming this support level. And we recommended KFY as a short not too long ago because of the bearish engulfing signal, bearish J-hook pattern. How long do we hold this? Until we see a buy signal and a close above the T-line. Okay, that's about all I got for tonight. And again, the whole point of tonight's exercise was showing that even when the market's not moving well, if you pick out some of these patterns, it's telling you that you might not have as much, what do I say, magnitude of numbers as far as good charts. But if the chart is acting well and the market isn't, that tells you something's going on individually in that chart pattern or in that stock that tells you there's a lot of buying going on without the market affecting it. Okay, so Candace, I don't know. I think something bit me right here at my office chair, but they said it probably was a tick. Okay, so before we get into individual stock requests, are there any general questions on candlestick signals? The moving averages are, no, they're all simple moving averages except for the T-line. The black line is the 8 exponential moving average. If I am trading weekly options, what other time frame chart should I be using? Jim, that's just a, you might use the hourly charts if you're trading on a weekly basis. Or you might use a combination of a 15-minute chart and an hourly chart, as well as your daily chart. We're seeing a lot of big bar gap ups related to earnings. If the big bar is a kicker, is that stronger than a non-kicker gap? Definitely. If it was heading down and they kicked it in the opposite direction, yeah, it's telling you there's been a drastic change of investor sentiment. Kicker is not a gap up. It is a trend reversal gap up. It is, how am I to understand if that's what that question is? A kicker signal, oh, I forget which ones were the kicker signals. No. Yeah, it's a gap up. Even if it opened right here, it would have gapped up from the previous day's close. A kicker signal is something going in one direction, and then you gap it up above the previous day's open and go the opposite direction. This is your strongest reversal. That tells you there's probably going to be a lot more upside. Nan, I don't know. I think it was just that they would watch the trend at that point. That if you were in a steady downtrend and you knew that things were oversold and saw a buy signal, that was time to get in. They didn't have stochastics. So I think it was just watching to see where the trend was and figuring out whether it was overbought or oversold. So obviously, a position up here, a candlestick buy signal in an overbought condition doesn't mean very much. A candlestick sell signal in the oversold condition doesn't mean very much. You want to see that buy signal in the oversold or the sell signal in the overbought condition. How much time after the 9:30 market open do you allow for the market to settle out? All depends on, there's very simple quadrant. If the market is trading in an uptrend and things are opening higher, I may be buying within the first minute. If the market is in an uptrend but everything's opening lower, it may take 45 minutes to see whether that lower open is now just profit taking and things are moving back up again. Gap up in overbought, what do you do? Gap down and overbought. Oh, Elliot, don't you have the videos on that? A gap up in the overbought, you start looking for a sell signal. A gap down in the oversold, you start looking for a buy signal. When short, what does one do if price closes above the 8 EMA without a candlestick buy signal? If it closes above the T line and there wasn't a buy signal, very simple. It better open lower the next day and trade lower. If it opens positive, you close it out. You can always reshort it when it comes back down through the T line. Here are some best friend signals. All right, we'll take a look at one. Oh, Jag, that's not good. That's a little, best friend, but it's more what I'd call a morning star signal. When you see a buy signal in oversold area, you buy when it gets above the T line or you buy the original signal. The most important factor is the signal itself. So again, depending on how far away you are from the T line, remember I said you want to buy on a buy signal to close above the T line. However, let me find something else that would be that the further away you are from the T line, the higher the probability is going to come up and test it. So if I'm buying because it's a good distance away from the T line, my first criteria is what does it do when it gets to the T line. If it's been holding the T line or fairly close and then opens positive, I'd rather wait to see it, make sure it's going to close above the T line. The 20 and the 80, yeah, that's all you really need to use is to see. You just want to know that you're not buying a buy signal when its stochastics are up in the overbought area. Candace, do you have a cat? That's usually what my cat does. Okay, with that, Jim, go ahead and do the double line. And in 3.2 seconds, do the second double line. Oh, Jay, we did Hubs. Salesforce probably wouldn't be long or short on this one. It's sideways. Really nothing there. And CTSH, another one that doesn't really have a great chart. And even if it does move, it's not going to be a big percentage move. Another chart, if you like it, you can stay long. Just not a very attractive chart. AUY, this one's having a hard time getting up, obviously, through this resistance level. So if I was going to buy this, I'd put a buy stop at $6. If it came up through there, it told me it was breaking out through that level. And Barracks, stay long. Notice where you had kind of a little reversal right off the 50-day moving average, right off the 50-day moving average. So what's the trend telling you? That you're in an uptrend. Where's your next target? Probably the top of the trend channel. And Silver Wheaton, just stay long as you stay above the T line. LMOS, there's your flutter kicker type signal. Notice they gapped up and then they gapped up again. It opened here and closed here and they gapped it up. That's usually a very strong setup. There's probably going to be more upside to this one. And SYRG, little slow curve. Not a very exciting stock, but you have this big downtrending resistance level. You have some buy signals. So if you're buying, just make sure it gets through this downtrend pretty quick. ANIP. All right, there's your gap up in the overbought condition. If you're long, where do most people buy? This is the most basic concept of investing that the Japanese rice traders illustrate for us. Where do most people buy? They buy exuberantly at the top. Stochastics in the overbought area. If I was long, I'd probably have my sell stop either here or here. But if it came back down through that level, that was your exhaustion. Your uptrend's over. Data, not a very attractive chart. If you had been long, you should have been out of it yesterday, and you shouldn't be back in it until they can get it back up above the T-line. I wouldn't be trading it right now. Western Digital is selling off. There was your doji gap down. Anytime you see that doji gap down, that's your bearish best friend. That was why we put a recommendation on shorting ML NX. Here's your doji gap down. You stay short until you see a buy signal confirmed. SPHS. Nothing here yet, but you do have the semblance of a J-hook pattern setting up. Here's a case, too, where notice how far away, when it came here, you were trading from the T-line, and you were up in the overbought condition. It moved a good almost 50% that day. So what happens when you have a big, huge move away from the T-line? Very simple. You flip to your 10-minute chart. I don't know which one it would have been. No, not that one, not that one. Must have been back here. This one looked like it. You stay long, you stay long. You know you're way up above the T-line. Until you see a sell signal, take your profits on the 10-minute chart. What's the worst case scenario? It turns around and comes back up. You can always buy it back. PTX. Another one's kind of broken out of the slow curve. Make sure your volume stays big. Wouldn't be afraid to be buying this one on positive trading tomorrow, because what's your main criteria or your basic criteria on a fry pan bottom? You can stay long as it stays above the T-line. Now with the bullish Harami today, if it opens positive tomorrow, the buying is still in progress. Whiting just climbed up above the T-line. You can be buying this one on positive trading. Just use the T-line as your stop. And SGY, nothing here yet until they can get this back up above the T-line. If I was short, I'd probably be covering a short position on any positive trading tomorrow. Just tell me that in the oversold area, that's where the buyers are stepping in. Holly Frontier, another one that if it opens positive tomorrow, starts trading positive, probably the best place to buy it is above today's open. If it comes up through there, your fry pan bottom is ready to break out. ALJ, one of the refiners, this one you can be buying on positive trading. BNQ. The REIT right now looks like with the evening star signal, it's backing off. I would suspect they're coming back to about the 50-day moving average. XON, another one where all you can do right now is stay long as it stays above the T-line. If you're staying long, I would put a stop just below today's low. Because if it comes back down through there after this doji type day, that pretty much tells you the downtrend is still drifting. There wouldn't be any reason to be in it. Douglas, nothing here either. You can see what's happening. They're setting up a wedge. I wouldn't be in it, but if it did break out to the top of this wedge, I'd rather pay $6.40 for it knowing that it broke out to the upside. Right now, there's no direction. ADXS, I probably wouldn't want to see it close below the halfway point. Now, if this opened lower tomorrow after the bullish or bearish harami, I'd probably come out of the position and just wait for the next signs of buying. So I would probably put a stop just below today's low. If it comes out through that or down through that level, get out. You can always use your 10-minute chart to see when to get back in. AT&T, never like to trade this one because this is the quintessential institutional trader. Just does not have a whole lot of price movement to it most of the time. Nothing here to get excited about. And STX, looks like it's pulled back, obviously, to the 200. Remember our simple rule. Once you have that best friend, you're in a 45 degree until you see a sell signal and a close below the T line. Now you watch to see if it comes back up as a J-hook pattern. And that puts you right back into that 45 degree. And we recommended NPTN today or yesterday. When was it? Today? Stay long on this one. And you can still be buying this one, especially if it comes back up through today's open. Micron, another one that's kind of showing you that you're in this uptrending channel. At this point, after the hammer signal, I would stay long and just watch to see what it does once it gets up to the resistance level. Whole Foods, nothing to get excited about here. Looks like it's supporting on this level. But I wouldn't be a buyer until they can get it back up above the T line. Starbucks, also a non-exciting trader. At this point, if you're anything, you're short. Ever since they did a doji gap down through the T line, when they start gapping it down, that tells you they want to get out with great enthusiasm. I would suspect the first target is to come back here and fill the gap. I know Michael talks about Microsoft. I don't trade Microsoft very much just because of the lack of movement. But right now, after they broke this downtrending channel at the 50, all you can do is stay long as it doesn't close below the T line. Big reversal up here. There's your doji gap down. You just stay short until you see a buy signal. Nally, I think it's still paying a good dividend. I would just stay long on this one. You can see the wedge formation. If you're long, you stay long. If you're looking to buy, I'd wait for it to break out through this level. Yeah, paying a good dividend yield. SAEX. Ooh, can't give you anything there. I don't know what that's all about. This one looks bad. JB. You're still looking at Primo Water. Big fry pan bottom. I still would wait for it to break out, though. The MS recommendation. Oh, Morgan Stanley? I don't know which one that was. AMBA. AMBA, we closed out when it closed back below the T line. Now we'll get ready to buy it back if it gets back up above the T line. Oh. COM. Very simple. If it opens positive tomorrow, it's going to move in the direction of how they open it after a doji. Your doji sandwich kind of telling you have a double bottom. Notice the double bottom started with your bullish engulfing signal. A doji sandwich would tell you the 50 is not acting as a resistance. Your first target would be right here. Your second target would be the 200-day moving average. AK Steel. It has to open positive to stay in it. If it opens lower, close it out. U.S. Steel, same scenario. You wouldn't want to see this one close below the T-line, but that's why the T-line is important. As long as they stay above the T-line, you can stay long. PayPal, nothing here yet, but you do have your Morningstar best friend signal in the oversold area. If it opens positive and starts trading above the 50, I'd be a buyer, at least coming back up to fill this gap. So at least you know you'd be heading in the right direction. Natural gas, nothing wildly exciting, a little kicker type signal. Watch to see if they can break through this. If they do, got wave 1, wave 2, going into wave 3. And the oil fund, trying to get back up above the T-line. If it does, next target should be the 50-day or the 200-day moving average. Archer Daniels, nothing wildly exciting here for two reasons. It doesn't have a real powerful chart movement to it, number one. Number two, even if it does move, it's an institutional trader. It's not going to give you a huge rate of return. Yield, stay short. There's your bearish kicker signal. Stay short until you see a buy signal and a close above the T-line. And Tesoro, wouldn't be long or short this one. No direction. They don't know which way they want to take this. And the GDX, the gold miners, you just stay long as it stays in this uptrending channel. Oops, didn't scroll fast enough. Ellie Mae, very dull, boring stock. If you like it, you just stay long. MJN, stay short, but you can see it's trying to do a base here on the 50, but you're not in the oversold area yet. And notice the very common sense reversal. You're in the overbought area, they gapped up. When they gap up in the overbought area and do a signal, get ready to start taking profits. GEVO, very simple. If it opens positive tomorrow on a doji sandwich breakout, you can be buying. eBay, J-hook pattern in progress. If I was going to be a buyer, I'd put a buy stop just above today's high. If it comes up through there, it's breaking that downtrending channel, putting you in a J-hook pattern, which this was about 8 points. That would take you up to almost the $40 range. JD.com. Right now, you can be going short with the expectation that it's coming down to the bottom of the trend channel. MITL, look for a 45 degree coming off of here. PRGP. Notice the tails to the downside. First you had a left-right combo, then kind of a doji hammer, or more of a hammer. I would suspect first test is going to be the 50. If they get through there, look to see what it does at this level. If it gets through that level, going to anticipate wave 1, wave 2, wave 3 coming up in this range. Rollins, just stay short. Nothing here, especially after your big gap down. Let's see. An SPB. Looks like a little J-hook. Notice it broke through this wedge. I'd stay long as it stays above the T-line. 3M, very boring. I wouldn't be long or short this one. iGold, I don't know how you'd trade that one. There's nothing there to read. Disney, nothing here either. If you're short, you stay short until you see a buy signal and a close above the T line. Thanks, Gary. Tell Sandy that. She just seems to have a different opinion. Racks, big breakout. Look for a 45 degree. How do you know from a good chart or bad chart? This is the whole process of using candlestick signals, Joseph, is to see the signals where they're occurring. Remember, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals, and that's all we're looking at is what investor sentiment is telling us. IAG, where do most people buy? They buy exuberantly at the top. So you start seeing big candles in the overbought area, get ready or start watching for your sell signals. Berkshire, nothing. Wouldn't be long or short this one. You're right on a support level. Your stochastics are in the oversold area. Yeah. And there's no direction to it. I'd be someplace else. ICE, look for a 45 degree off of here. There's your best friend breakout. Nugget, no, I don't wait for pullbacks. Remember, if you're seeing a buy signal, what do you want to see from here? You want to see the bulls are still in control. I give the illustration or the example that anytime there's a big move, somebody says, oh, I'm going to wait for it to pull back so I can get in. There's two things wrong with that scenario. One, if it's pulling back, that tells you that there isn't very strong buying. And number two, it pulls back to a level that you think you want to buy because you think you have the immaculate entry conception, which is as soon as you buy it on the pullback, it's going to immediately turn around and head back up for you. That's wishful thinking. If I see a buy signal and it's confirming, I just want to buy it. I don't want to be buying something where they're pulling it back because that's telling me there's not enough strength there. All right, Ruth, ACIA. A little Morningstar signal. You can be buying this one on positive trading. I think we did natural gas. I'd be ready to buy this when it breaks out. Oh, that's the question. Yeah, if you can see a trend movement or a pattern, that's a good chart. If you see something like this, you just say, oh, there's nothing there. Stay away from it for a while. Doesn't mean it won't come back to be a good trading chart at some point in the future. CF, looks like all you can do right now is go short. It's your best friend to the downside. Carol, yes, this is being recorded. Uh-oh. And Jim will tell you how you can get the recording. All right. Thanks, Jim. HYG, there's your Morningstar signal. And so what do you want to see after a candlestick buy signal? Well, if they gap it up, not only tell you that, look, not only did they tell you they reversed it, especially right off a support level, but they're back in with great enthusiasm. Where's your next target? Probably the top of that trend channel. How about long term? Oh, there's nothing real exciting about this stock. I mean, you could buy long-term options on anything. If you like it, you just stay long as it doesn't close back below the T-line. It's just that you're never going to get a whole big, huge percentage move unless you're planning on holding it very long term. First solar, get ready to go short. Big bearish engulfing signal. I think we did MITL. MITL. Look for a 45 degree to come off of here. Tesla. Not anything extravagant, but if it stays up above the T-line, you stay with it. Remember, somebody's telling you that this is still in an uptrend as long as it stays above the T-line. Now, Armin, I don't make it simple. It is very simple. It's just simple logic put into graphics. Chipotle, if you're anything, you're short. You just have to watch to see what it does once it gets here. With your stochastics getting toward the oversold area. Paul, I don't know whether I can get that over here. Whoops. Oh, why? Morgan Stanley Internet Final Settlement. Nah. Ellie Mae. Oh, no. A cradle is usually, you can see there's very flat trading, and that wasn't flat trading. You're not going to ever make a whole lot of money in Ellie Mae. It's just too big an institutional trader. Amazon, all you can do is stay long as it stays above the T-line. And Dollar Tree. Anytime you see that big move, how long do you hold it? Until you see a candlestick sell signal and a close below the T-line. As you can see, there really hasn't been anything to tell you that the T-line's been breached. Avon. There's that break out of the wedge. Right now, all you can do is stay long. You're getting up in the overbought area. I wouldn't want to see it close halfway down this candle. Notice where you are, right up here close to the previous high. More than likely, if it started trading off tomorrow and I was long, I'd probably take profits with the anticipation that it's coming back down to test the T-line. Joseph, I don't know. Sometimes I have problems with Omnovia. EGLT, there's kind of your bobble pattern. You buy this one on positive trading. The bobble's very simple. Runs in the first resistance level. There's our bearish left-right combo. They pull it back. Where did they pull it back to? Right smack dab to the T-line. Did a Morningstar signal. That one you can be buying on positive trading tomorrow. Let's see. Kicker signal to the downside. You can be shorting this one. First target. You probably draw a line right down through the bottom. So first target is right here. AMD's been sluggish recently. Oops, they did bring it back up above the T-line. You can buy this one on positive trading, kind of a little mini scoop J-hook pattern. Price line. Another one that's kind of caught sideways here. I probably wouldn't be long or short price line right now. If I was going to go long, I'd want to see it break out to the upside, somewhere around the 1420 range. In a fast-moving entity like the Russell 2000, would you buy it, market? Oh, Usually you buy at market on the Russell 2000. Because the volume is so big, it's not going to, you're not going to be whipped around very much. System mechanic doesn't like this program. Ooh, I don't know how to help you there. BGC. Yes, that is a kind of a belt hold signal. You get ready to buy this on positive trading, and then just watch to see what it does at this this resistance level. How would you trade it? If it opened positive and started moving positive, I'd be a buyer. I definitely want to see it get up above the T line. But if it opens positive, you stay long. I wouldn't want to see it close back below this level. If it did, it tells you still kind of in a downtrend. EWZ, Brazil capped ETF. All you can do is stay long. All right. Guess we got most of them. All right. If a stock opened positive pre-market, you trade it right away? No. Remember, anything that happens in pre-market is not the majority of the people that are buying or selling. You might trade a stock that trades 2.5 million shares during the day, but pre-market, 300 shares could move it from price to price. So I'd rather just wait to see what happens when everybody is either in buying or selling. When you say positive trading, is it above the close or the high? Above the close. Remember, the open and close are the most important decisions during the day. Everything in between is noise. PSEC. Nothing wildly exciting. If you like it, you just stay long. Okay, for those members, I will not be, maybe I'll be here in the morning just long enough to tear down my computer. Then we're heading for Cuca Lake. So the next time will be where we open up Monday morning. We'll have people at the lake. All right, everybody, have a good evening. We will see you in the chat rooms. Thank you for attending tonight.